talking today about becoming investment savvy, just some of the basics around stocks, bonds, and mutual funds. My name is Isaiah Goodman, the Chief Financial Advocate at Becoming Financial. So when I talk to my clients, I know one of the biggest things that they're apprehensive or nervous about is actually, what do stocks mean? What are bonds? What the heck are mutual funds? You see the tickers or the stock market quotes go up and down each day, but what does it actually mean? How are they coming up with these numbers, and what does it mean for me and my future? Today, we're just going to tiptoe into some of the basics of what these mean, and in some future videos down the road, we'll talk a little bit more about what that means for your future. First one, most common, stocks. Another term for those is called equities. Essentially, what a stock is a big piece of a pie of a company. So if you own a private company, you might own 100% of those quote-unquote shares. But once a company goes public, so if you've heard of IPO, once a company goes public, they issue their shares for a certain price to raise money for their business. Then those shares are traded around. And so it's almost like baseball cards. If you want that card more than I want it, you might be willing to give me certain money or trade other things for it. So stocks basically rise for supply and demand. If people think the company's doing well and they think it'll continue to do well, that price will continue to grow. But as people get nervous about the economy or certain companies, maybe they have bad news, the share price will go down because people don't want it anymore, right? So just supply and demand. But where that comes into you is, say you own a ton of shares of a certain company and that company's doing really well. Once you sell those shares to somebody else that wants them, that's where you receive that profit or that gain. And we'll talk more about the taxable implications and stuff like that. But biggest thing is stocks are essentially an investment in a company. You hold it hoping that it grows. What is a bond? A bond is basically a loan instrument to either a company or a government entity. So you'll give a company or a government $1,000, let's say. They'll promise you an interest rate. Nowadays it might be 2, 3, 4, 5%. And then they're going to pay that out typically quarterly and then give you the loan amount or the principal back after a certain number of years. So for example, let's say you have a 10-year bond at 2% interest. You put in $1,000, you're going to get $20 per year, so $5 per quarter. 1, 2, 3, 4. So $20 per year for 10 years. Essentially, you'll get $20 back per year. That gives you $200 total of interest, and then the $1,000 back. So you give them $1,000, you get back the $1,200. That's typically a little bit safer than stocks. Now, the price of bonds can go up and down. So imagine a seesaw where if interest rates go up, the price of bonds goes down. Because if interest rates go up, I can go get a better rate somewhere else, right? So if I want to sell the bond that I have to sell it for a little bit cheaper. Again, supply and demand. But if interest rates go down, now my bond is worth a little bit more. Because if I have a 5% bond and everybody else can only get 4%, they might be willing to pay me a little bit more for mine. Make sense? So biggest thing there is stocks go up and down with the market based on what people want for them. Bonds go up and down with the interest rate. But again, they're typically quote unquote safer. So having a good mix of stocks and bonds in your portfolio is what makes people feel a little bit more safe when things are changing. Now, last thing, what the heck are mutual funds? A mutual fund is actually an investment company. So it's a company that goes around and buys things like stocks, bonds, real estate, commodities. We'll talk more about that in the future. But they buy all of those different types of investments, and then you can buy shares of the mutual fund company. So big places like Fidelity, American Funds, Franklin Templeton, they buy a ton of different investments all around the world, and then you can buy shares of that company. That price can again go up and down based on all of the investments inside of it, but it helps because now they're professionals that are going and buying a ton of different things. You don't have to worry about, is it this company or that company? You just trust in the asset manager. So that's just some of the basics. Next time we're going to talk a little bit about where do all these stocks, bonds, and mutual funds go. But hopefully that's a good introduction into what the heck these things are.